Hi there, I'm Mark Sebastian, founder of Option Pit, and this is the Vol Report. Reminder, this is for education purposes only. Should not be considered investment advice. Options have risk. So, a little bit of follow through from Friday's sell off, but nothing quite like what we saw, although the open then was pretty similar to the open that we're seeing today. There's a lot that's kind of, we were down about this for the first couple hours, and then things got worse and worse and worse. And then eventually we saw the VIX go to 20, and it could do that again. All right, you can see the VIX is backward, right? So take a look at the curve. Pull up the futures here. You have the Feb expiring Wednesday over 17, but still trading at a $1.73 discount. Feb regular is trading 16. The Feb 21s are 15.5. March is 15.25. It is now about flat, or regular March is 15.10. April is 15.20. So we are just on the cusp of having a full backwardation, a full curve that is kind of inverted to what most people are used to seeing. Pay attention to that March, April. Feb only has a couple of, 9 days. Pay attention to March, April, and May. If that curve inverts, we could be here for a very long time. If it does not, we may see everything kind of fall back into place in short order. Could be fascinating in either way. So I think that's something to be watching. We managed to the low of the day for the SPX. We look at the stats for the day. The low is 27.33. The top was 28.72. All right, so let's do some math here. Are we able to get to our couple of things? We just barely missed touching the 50-day moving average. We were within, the 50-day is 27.15. We were within 18 points. Not bad. Not bad at all. Then, in addition, let's think about the high to the low. 28.74 minus 27.33 divided by 28.74. 4.049%. I'm going to go out and just say that's a 5% sell-off. Right. Not a 5%. So there is obviously the potential for things to turn on. We could see volatility continue to we could see vol tank. We totally could. But we also could see it continue to hold high. There's no reason that VIX has to go down. I mean, if we keep moving now, we've only moved 0.5%, but if we keep moving 20, 30 points a day, guess what? VIX is not going to go down. All right? There might be some trades that let you get it in and out, that let us set up bear trades. But I don't see any reason for us to just say, hey, well, volatility has to revert back because that's what volatility does. It might not. We could be at a point where we get some revert. Part of what pulls VIX's long-term mean to 17 is we do have to have some days where VIX gets to 20. Maybe that's not today. Maybe it's not tomorrow. But we'll see one this year. And, for all we know, it could be today. Right? The high in the day for VIX. High in the day for VIX is almost 19. So we're within a stone's throw, and it's not like we've had a lot of hard rallying in the SPX. So, there is real potential for volatility to continue to fall. Now, one area where there's some strength, you are seeing some people jumping in on Apple. saying, you know what, that's enough. I'll take the dividend now. You've got some people that are playing long, your Googles and different things like that. Well, not long, but you've got people watching that. And then I do want to talk about, I wrote a piece for The Street that I think that the mid caps, KRE, your Fifth Third banks, though your Huntington Bank Corp, those are areas where there is going to be potential for a rally ahead, faster than XLF and faster than the S&P, because they're super sensitive to rates going higher and the market going higher and the economy rallying. So, I am watching that. Additionally, the Russell 2000, generally pretty bullish on rates. It was relatively strong compared to the other indices. It was not nearly as bad. And it's one that I also see could be a pretty decent leader for the overall market. We might still see a little ugliness in the overall market, but NDX is catching a bid. SPX not selling off anymore. Vol where it is. I like the way that we are generally set up. And we could see a rally today. I don't know. There's a lot on the table. All right, one thing to watch, and I'll leave you with this. Keep an eye on IEF and TLT. Bonds have been in a bond bloodbath. It's been a bond bath. And I know you're saying IEF, the 70-year Treasury fund, went from 106 to 102. That's like an unheard of move for this. All right, take a look. I want to pull out a year. Take a look at the movement in this thing. I mean, that's not bad. And then TLT, which is the back end of the curve, the bonds, which have been really nutty. You're getting some real movement here. So until bonds stabilize, stocks and the TLT are going to correlate. That's bad for the S&P 500. And so I think if you want to look for bonds to go green if you think the SPOOs are going to go green. But if you're looking for an area to cherry pick or to start pecking at, I really like KRE. I like the mid-cap banks and probably the Russell 2000. All right, folks, if you have questions, you can email me marketoption.com or call me 888-TRADE-01.